What's up, team? Been about a month, I think. I just kind of stopped wanting to do these. I'm still going to keep doing them, but probably much more infrequently and only when I really have something to say. Usually, I like to do them when I'm making money, and I didn't make money today. But I think I was making money when I originally posted I was going to do it. So I'm sticking with it. No, I think it's an important time to update my biggest positions, specifically OCUL, ocular therapeutics, and get into it. So why don't we start with that? Because that's the one I really want to talk about. They obviously had earnings yesterday, and I was originally concerned that in the press release of the earnings release, they took out the words strategic partnership as a source of potential funding for the trials for wet AMD. And I didn't know why that language would be removed, but my concerns were more than assuaged when I heard the conference call. And there were two different times in the conference call that management brought up strategic partnerships. And I will read the exact lines to you now. So if you're on this YouTube, you probably have already heard it, but I'll read it anyway. He said, as we continue to evaluate funding alternatives, including collaborative partnerships and finalize trial protocols, we hope to be able to give concrete guidance on precise plans in the near future. So concrete guidance on precise plans in the near future. And he says, I would now like to turn the call over to Rabia, who will explain our ongoing clinical trials, where we are with our planned pivotal trials in wet AMD and diabetic retinopathy, and our next steps for our OTX, TIC, and dry eye program. Later on in the call, he was asked a question in more detail about what the plans are, or at least what the possible trials might look like in wet AMD. If you recall, they said that they have two different designs possibilities for wet AMD. And this was his response. Yes, we have a lot of options. And with the new guidance and the feedback from the FDA, there are a lot of paths we could take. Clearly, we have a very active data room now, and discussions with strategics will potentially determine which path we take. So unfortunately, we don't really have the ability to kind of definitively say at the moment which protocol we would choose to go down, which protocol or protocols. But we hope to have that in the very near future. It's a very exciting time. There's a lot of possibilities, and we have the data room, and the data room is extremely active. I hope Dr. Rabia, if she can add. Okay, so there's a lot to unpack here. Okay, first of all, what you have to understand is they can't run the wet AMD trials if they don't get a partner. Okay, they even mentioned again on this conference call that the cost for wet AMD trials could be upwards of $400 million. Okay, the market cap is $500 million. So even if they were to do a secondary of say 50 million and then raise 50 million in debt, they're not even close to funding the going concern of the business, let alone funding a $400 million trial. So I find it really interesting that throughout this whole call, they did not backtrack on the wet AMD indication, right? If you recall, diabetic retinopathy was going to be the kind of, second opportunity if they couldn't get the funding for wet AMD, because that's a cheaper program to run. But instead, they kind of talked about wet AMD, the whole first 20 minutes of this conference call. If you take that, coupled with him going from saying that in the near future, they plan on giving us an update, to the very near future, they're planning to give us an update, it's my belief you don't use language like that unless you are very close or even have a term sheet already that you like. Now, the skepticism I would push back on is he's negotiating right now with one or more parties. If it's only one party, then he has to show a brave face and make it seem like he's got all these options. Fair enough. So he talks this big game on a conference call, hoping to make the one party step up their game and pay whatever he wants them to pay. If that's the case, if he was trying to do that, he doesn't talk about how he's going to get this done in the near term or the very near future, because all that does is paint him into a corner. And he's kind of stuck now, right? I mean, he can't get out of the box he just put himself in. He put himself in a box that they're going to get a partnership, and the partnership is going to fund wet AMD. And it makes perfect sense why he didn't tell us what the trial protocols are going to be, because that's something that a partner is going to announce, right? It's going to be their trials. So it's up to them how they want to proceed. And it would be Ocular getting its skis ahead of itself by telling people now. So it's my belief that we will have a partnership in the next, I don't know, 2 or 3 weeks would be my guess. I don't know how you go from near future to very near future and get kind of outside the month of May. But at the very least, I think we're safe with June OpEx. Now, what happens with the stock? So, sometimes you sign a partnership and the stock goes down, but I don't really think that's possible here. I mean, the economics are so enormous for wet AMD alone that I would think they would receive, hundreds of millions of dollars upfront, in addition to, double-digit kind of royalties on what could be, multi-billion-dollar drug. So I would think that the stock could as much as double on whatever the partnership ends up being. So, I'm as excited about it as I've ever been. It's not as big as it once was because it went up a lot and I sold some for margin purposes, but it's currently like about a 30% delta adjusted position, 2/3 common, 1/3 June 6 and June 7 calls and some June 6-8 call spreads. So, the rest of the business, Dextenza, disappointed. There was never really any valuation in Dextenza in the first place. We have a readout in Q4, which nobody's expecting to matter. That definitely could make the stock go up a lot if that's a really clean readout. It's another big opportunity, but just no one really cares about it or is talking about it. And, the key is them solving their cash problems. I mean, they only have enough cash now for about 4 quarters at most, and that's not funding any of the trials, right? So he's got his back up against the wall, and they could do a secondary for $50 million to fund a couple more quarters of cash burn, but that's not going to get these trials funded. It's just going to keep the lights on. So I think we are really close to the end here. And, I don't know when it's going to happen, but I'm increasingly confident in it happening. So that's my view with Ocular. I don't know if anyone has any questions. Your usual caveat is I know nothing about science or biotech or about the technology of TKI. I can barely spell TKI. And yeah, that's Ocular. So AYX, Alteryx, another thing I know nothing about. This has been a disaster. It blew up from 51 to 35, 36 in the last 8 days. And I made that one of my biggest positions as it's gone down, taking huge losses on it. Basically, the crux there is they didn't beat and raise like they usually do. And then they brought down revenue guidance for next quarter while keeping the full year revenue and full year ARR the same as last quarter. And next quarter's ARR is the same as it was always going to be. So ARR is basically the underlying metrics of the business, the annual recurring revenue. The revenue is clouded sometimes by how long a contract is. When they sign a new contract or they do a renewal, depending on the length of the contract, they have to book a lot of that up front because it's not a full cloud business. A lot of it's on premise. So the result is they have wildly volatile revenue quarter to quarter versus very smooth ARR quarter to quarter. The market does not believe that the revenue is achievable this year or that the ARR is achievable. And as a result, the stock just goes down every day. All they have to do is guide quarter 3 to support their annual guide, and the stock goes back to above 50, right? It's pretty much that simple. It's trading at a huge discount from a revenue enterprise value basis and an ARR enterprise value basis. And as long as they show that the business isn't imploding, which it's not, you can look on all the metrics of renewals and customer count and new business coming from existing customers. It's all at highs. So you would see that in those numbers if they were losing business or if there was anything wrong on the underlying side of the business. And I don't think there is. So, I originally got attracted to this because there's a controlling shareholder. So no one can go hostile. There's a controlling shareholder, and that controlling shareholder has, his own right to ever sell the company. And they put in a change of control and huge out of the money stock grants to the management team in February of 2022. Also, a board member through his fund bought $50 million worth of stock at, I believe, $65 a share in February of 2022. So you don't usually see that. Oh, and finally, the founder, who's been a regular seller of stock, stopped selling stock in March of 2022. That was his last sale. So you don't usually see things like this unless the company's open to a sale and transaction. And obviously, the stock at 35 versus 70, it was literally at $70 6 weeks ago, makes it much more palatable to sell the company at a good, decent price. So I'm not saying they're going to sell the company in the next few months, but I still think by the time we exit 2024, this is not a public company anymore. And I've been very wrong on this the last 8 days. So I would wait for the knife to stop falling, unlike what I did. And yeah. So besides that, I have another new core position that I put on about 2 weeks ago, or 3 weeks ago, I guess. And I'm really excited about it. It has gone up a little bit, though it's down a bunch today. It is SPHR, SPHR, and it is the spinoff from Madison Square Garden Entertainment, MSGE. Actually, MSGE was the spinoff, and they changed the tickers. It doesn't really matter which one's officially the spinoff or not. This story is pretty simple, while at the same time being a bit of a head scratcher. So the Dolans control a bunch of different companies, all related to the Knicks. Okay, first they own the Knicks and they own the Rangers, and that's a totally different company. It's MSGS, and that has nothing to do with any of these companies. Okay, then they owned MSG Networks, MSGN, which was the broadcast rights for the Knicks and the Rangers. That used to be a public company and got rolled into the old MSGE. Okay, the old MSGE consists of currently Sphere, SPHR, and the new MSGE. Okay, what is the old MSGE? The old MSGE consisted of the building, the long-term lease in the building of Madison Square Garden in New York. Okay, it consisted of the Radio City Music Hall and the live the Rockette show in December. It consisted of the Beacon Theater, and it consisted of Madison Square Garden Networks, the thing I just described, and it consisted of Tao Entertainment, Tao Hospitality, and finally, it consisted of this giant money pit, which is the center of this whole thesis, the Sphere in Las Vegas. Okay, and I'm going to do that at the end. That's the whole thesis, is the Sphere. So they spun off MSGE, and in the new MSGE, you have Madison Square Garden, you have the Rockettes, you have Beacon Theater, and I think that's it in the new MSGE. You have some debt, like $700 million of debt, and it's trading at like $33 a share. And 2/3 of the shares were floated, and 1/3 is being retained by Sphere. So Sphere still owns 1/3 of the new MSGE. Think of the new MSGE as a safe cash flowing company with contractual revenues and earnings, and shouldn't be a cash payer taxes for like 4 or 5 years, and something like a high single digit 10% free cash flow yield, something like that. If you do, like when you look at spinoffs, sometimes they do good co and bad co. MSG is the good co, right? They got rid of the tech. They put the toxic assets in Sphere, and the really high quality stuff is in MSG. Okay, I own Sphere. Okay, what is Sphere? Sphere owns 1/3 of MSG. It owns Madison Square Garden Networks, which is a very bad business, right? Ever since people have been cutting cords, nobody actually wants to pay for local regional sports networks. Just a few percent of the people actually watch it, and 100% of us have to pay for it on our cable bill or DirecTV bill. So that entire business is going to have to be restructured at some point. Okay. The good news is there's $900 million of debt at Sphere that's only associated with MSGN. It's non-recourse to anything else in the business, and I value MSGN at 0. I just put the $900 million of debt against it, and I assume they default or they restructured at some point. Okay. The next thing at Sphere was Tao Entertainment Group, and they just sold that. So they're going to net $300 million in cash from that. Okay. When you're all said and done, okay, right now, Sphere at $30 a share is, if you back out the 1/3 stake of MSGE that publicly trades, okay, and you back out the cash, and you back out the cost to finish Sphere Las Vegas, which I'm going to get to in a minute. That's the whole thesis. Okay. You're paying something like $200, $300, $400 million for Sphere Las Vegas. Okay. What is Sphere Las Vegas? Sphere Las Vegas is what was supposed to be a $1.2 billion, but is now going to be a $2.2 billion entertainment venue in Las Vegas at the Venetian that only will house concerts, movies, things like maybe fights, MMA. Maybe it'll do some esports, things like that. It was designed specifically as a venue for sound, for music, and for entertainment, not for sporting events. Okay. Everything about this venue is cool. You can go to YouTube, put in Sphere Las Vegas. You can watch a ton of different videos about it. And I think it's going to revolutionize concerts. Now, I love going to concerts, but I don't usually go to see bands in 20,000 seat venues. But this holds about 20,000. It's 18,500 seated, 20,000 with general admission floor. Okay. And it's shaped, if you've ever been on the Coliseum in Las Vegas, it's shaped like that. It does not go all the way around. It just goes, like that. And it goes straight up. Now, usually there's bad seats in 20,000 seat venues, right? Only probably a couple thousand of them are really good. The beauty of Sphere is that inside this venue, they're going to have wall-to-wall LED screens, basically just hugging half of the venue, in front of you, on top of you, and somewhat behind you. And it's going to be the most immersive technological experience you'll ever see at a concert or a movie. Think of like IMAX on crack. And they just, the first band that's playing there is U2. U2 is doing 17 shows in the month of September, October, and the first half of November. They sold out all 17 shows. And I believe they're probably grossing between $7 and $10 million a show for U2. Okay. This is so profitable that I emailed the VIP to see how much a box would cost. They have 22 boxes, and they said the boxes start at $50,000 a night. So they'll make over $1 million a night just in the luxury box sales. Okay. Now, why is it trading with a $300 million valuation when it costs $2.2 billion to build? People are very, very skeptical that this is ever going to make money. They're very skeptical that they're going to make money at U2. There was articles that came out that said they gave away the farm to U2, and it's basically a break-even operation just to get U2 to play there. They're very skeptical that other bands are going to play there. People think that bands will be intimidated by the venue and won't want to give up them being the center of attention. The movie's coming out. They're doing a movie 3 times a day by Darren Aronofsky that'll cost between $50 and $120 a ticket to see a 60-minute movie in a 4D experience. There's air compression that hits you. There's smell, wind, whatever. That's the same thing with air compression. No one has any idea what it's going to be like. So, there's no way to game it until you see it. Now, they're not really leaving anything to chance. They built a replica model of this in Santa Monica. I think it's Santa Monica in California. It's 1/4 the size, and they're using it to run all the tests and figure out how to make the movies and stage the concerts. So they know exactly what they're playing with because they already have one, but it's never been seen by people. So it's my belief, based on my personal love of music and of concerts, that this venue is going to be just a massive success. In fact, I'm going to go see U2 in November, and when I was buying the tickets, I couldn't figure out where I wanted to sit. If I wanted to spend the $500 for the lower level seats that are still pretty far away from the stage, or if I wanted to spend the $150 for the worst seats in the house. Because when I went last year to see Adele in Las Vegas, I was able to get free tickets. Now, let me tell you a little bit about Adele. So Adele is playing at the Coliseum, and it only holds like 5,000 people. Adele instantly sold at every show at the Coliseum. And if you want to go see Adele in Las Vegas, the cheapest ticket on StubHub for any show is like $1,500 a ticket. The last row at the Coliseum, okay? Demand is that great for that show at the 5,000 seat level, okay? When I got comp tickets, and I was sitting in the balcony, though there were pretty good seats in the balcony. The Coliseum balcony is very far back from the stage. That show also used LED screens in a similar way, but on a much smaller scale than what the Sphere is going to be. And the show was phenomenal. It was amazing. And it was all because of the wall-to-wall screens. And I wasn't really watching Adele. I was watching the screens. So that, to me, gave me real confidence that no matter where you're sitting in this venue, you're going to have a kind of an experience like no other arena can ever give you. Now, why will bands want to play this venue? Well, first of all, I think that they could probably pay the top 20 or 30 acts in the country $3 to $5 million a night to play the venue, which is a lot of money. And they could do a few weeks of shows and stay in the same city as opposed to having to tour all over the country, right? Your costs as a band are way down because you're not putting up and taking down sets every day. It's all just there. You set it up and you leave it up for the month or whatever while you do your residency. I also think that the most seasoned bands like U2 have done everything already. And if you have the opportunity to play a new kind of music venue that will be proven once U2 does it, I think there is not a band in the country in the world that would want to do it, right? How many times, can Paul McCartney play an arena or a stadium? Now, he's pretty old, but Billy Joel already has a contract with Madison Square Garden for a residency. I can't imagine Billy Joel not wanting to do this, and the kind of show you could put on with Billy Joel or Justin Bieber or whoever. So they report earnings tomorrow. They have no conference call. They said the first conference call is going to be after this quarter. They have not given any projections about anything to do with the venue. They won't tell you what their operating margin is supposed to be, what the revenue should be, nothing, okay? And there's a lot of reasons why they're probably doing this. The first 10 or 20 days post-spin, they're striking management's options based on where it's trading. So they have no incentive to get the stock up. I also think that they have no incentive to set expectations too high, going into the launch. I think that this thing has the potential to be a $3 to $5 billion valuation. I come to that at it doing 150 to 300 million in EBIT and a very large multiple on that. That would just be a 20 multiple. And I think something like this could have a bigger multiple than 20 multiple. It's one of a kind. I think they could put them in multiple different cities. And I think that it's the kind of thing that people just don't want to take the risk on until they see if it works. They've already sold the 17 U2 shows out. So all they need is those shows to be a success, and the rest of the bands they'll pour in. There's already a pretty strong rumor that Harry Styles is the next person to do it, and Harry Styles is going to do it next year. Yeah, so they own. Sorry, that's another hidden asset. They own $100 million of land in London to build the London Sphere. So I don't even have that in my EV, but there's $100 million hidden asset that if they don't build the London Sphere, they can sell the land and make $100 million. But the London Sphere would be next if this works. So that is my Sphere pitch. It's my top three positions. My top three positions are Ocular, Sphere, and AYX. Magnachip. Magnachip, same old shit, terrible quarter, crappy guide. But they bought back a lot of stock. They bought back 500,000 shares in February and 500,000 shares in March. And that's great. I think they're going to get down to the 40 million share point. I can't remember if I did a YouTube or not when Gil Nathan joined the board, but I know Gil personally. I went to college with him, and having Gil on the Magnachip board is a game changer. It's basically, I feel like I'm on the board myself. I'd rather him be on the board than me. So Gil owns a bunch of stock personally, and in fact, Gil's in Korea right now, meeting with the company and touring the factories. And I think that the second half's going to be telling. Either they're going to ramp the revenue the second half or they won't. And if quarter four does not end up being materially above quarter one, quarter two, then I'll sell my stock in 2024. Because then it's, dead company walking for the most part. So that's the Magnachip. Yeah, Jeff, I was just talking about the Sphere. The Sphere in Burbank, California is the test Sphere. It's not for commercial use. They built that as their headquarters, and they do all the testing there. So it's pretty cool. You should try to get a tour there if you can, but I don't think you can. BBIO, I still own it. They're not going to get sold anytime soon. So that was kind of a false flag. I think that there's a decent chance that readout in July is positive. I don't think you're paying a lot for it. So I am keeping my BBIO, and I'm rolling the dice, baby, into the very big July catalyst. ARDX, I own tons of call spreads on it, and I've just kind of made my bed there. I don't see myself adding there at all. It's not marginable. The catalyst is many months off. And I have a buddy that's his biggest position. He's very, very, very positive on it. He thinks that, it's going to be a huge home run commercially once they get approved, if they get approved. And, I just have those call spreads kind of like set and forget it. Hope they figure out the exterior construction of Vegas, because the outer skin has been badly damaged several times. That's interesting, Jeff. I hope so too. That's very, very interesting. As you know, the outer skin is going to have it's a digital billboard. The entire outer sphere is going to be digital billboard, and they're going to advertise where you can see it from planes as they land in Vegas. There's some skepticism that they won't be able to get naming rights, but I actually think that it won't be very hard at all. It's one of the coolest looking things I've ever seen, and I think a lot of brands might be waiting for it to open first. But I could see Apple putting down $25 million a year to call it the Apple Sphere. It's that cool, and it's that good for branding that wouldn't all surprise me if someone like Apple bought naming rights. Your catalysts with this thing, by the way, speaking of, are obviously it's going to open in September, so you're not that far from that. But your catalysts are they actually start giving projections. They name other bands that are going to play there, and then they sell sponsorships. I mean, the stock could go up huge the day they announce the naming rights are sold. So I think fair value today is probably in the mid 40s, maybe even the mid 50s. And then your upside is, 200 if all goes well, 150, whatever. What else? I'm tired of hearing myself talk, quite frankly. I don't think anybody ever thought they'd hear me say that. I think I've said enough. I guess I don't really love doing these things anymore. But I'm very excited about Ocular. If if that ends up working out the way I think it's going to work out, we just might have to have that ocular Vegas party if it happens before June OPEX and the stock's in double digits. That's kind of my litmus test. It's above 10 and it happens before June OPEX. And if so, we'll figure it out. That's very nice of you to say. I think your name's Paul, right? I think it's Paul. I'm glad you were able to join live. BMYRT. Did you guys probably saw that Giovanni? What the hell's the CFO's name? He left. Hey Phil, I don't know. I think I always think your name is Paul. So Bristol Myers CEO left, and I don't know what that means for a settlement. Usually they like to throw out the bad stuff before the new guy comes in, but Giovanni's going to be on the board still, so I would be surprised to see a settlement in the fall. It's possible. It's more likely to happen next year, but I'm still pretty constructive on them settling eventually. Thanks for all the kind words, guys. I appreciate it. IAC, I sold all my Interactive Corp, but not because I'm negative on it. It's because I just needed less exposure, and I was really just moving with the market. I don't know what unlocks value there, right? Dotdash Meredith is not going to have a good year, and that's the main driver. Angie's not going to do anything special this year. So all you really have is you own a big stake in MGM, and you have a huge discount. So I don't know what makes IAC work until Dotdash Meredith works. Now, never say never. They have all sorts of optionality. You might wake up one day and they sell Care.com for $2 billion to a private equity firm. So these are very smart people. So there's definitely worse places to put your money than park it in IAC. I've just decided to move on from it. I still own AQNU. I don't know if I talked about that. I talked about AQN, I think, on this podcast a month ago. I got pretty lucky with AQNU, and which is really AQN, because there's now like 2 or 3 activists involved, and they're going to keep management honest. And I've kind of put that in, set it and forget it. I think that stock will be over 10, probably over 11 by this time next year. And I'm getting a huge yield with the AQNU. So, my total return should be 25-30% from here between now and this time next year. And it's a utility, and it's, much different risk exposure than the rest of my portfolio. So I don't plan on touching that. Cure has a huge event coming up. I mean, it's going to happen next month, and the market is very skeptical. They're going to show very clear evidence that the Huntington's drug works, and rightfully so. The odds that it's going to be black and white, that there's efficacy data on on functional scales is low, but you're not really paying for much of that. So it's the gambler in me. It's a big position for biotech at least, and it's like a 9% position, I think. And it could go down 25 or 30% if the data is mixed, because they're burning so much cash. On the flip side, if they ever announce the first sale of hemophilia B in the U.S., or more importantly in Europe, the stock will probably pop, because they're going to get a bunch of cash from that. The European sale has to happen by July 2nd, I think, and the market's skeptical it's going to happen by then. So if it happens by then, you're going to add like $2 a share in cash. So I think it'll go up as much, maybe up to $2 a share, because I don't think anyone's expecting it. Those are pretty much my biggest positions. I think, but since the last time I was on here and now, WWE got sold. I can't remember if I was on there since WWE got sold. Maybe I have been. Maybe I was. But I bought Endeavor, EDR, and I made a bunch of money on that. And I still have a small position in Endeavor, but that's pretty much played itself out. In a couple of years, that's going to be pretty interesting, because they're going to split off WWE and UFC, and then you're left with the stub of Endeavor, and it'll be very much like Dell and BMW. But that's at least 2 years away from tax perspective. So that's too far away for me for a catalyst. All right, I'm not going to stop doing these. I just might do them less frequently. That's all. Usually when I have something to talk about. Take care, everybody. Cheers. Have a great afternoon. Thanks a lot for listening.